In this video, I'm going to be breaking down the business credit application and what banks are going to be looking at. I'm also going to share with you some tips that you can implement right away to help increase your approval odds, and also some pitfalls that you want to avoid so that way you avoid denials altogether. Now, the reason I'm making this video is because there's way too many people out there that are blindly applying for business credit online or in person. And I wish that I had something like this when I was trying to scale my business through funding. And I don't want you to be one of those people. So if you can understand this, then getting access to working capital is never going to be a bottleneck in your business again. With that in mind, let's jump right into the first point. First piece of a business credit application is going to be the business owner's personal information. Now, depending on how you're structured, whether it's just you as a single member or if there's multiple members inside of an LLC, everyone that's involved inside of the business, again, as an owner with over 20% ownership, is going to have to list themselves on that application. And so some of the information that banks are going to want to look at is going to be the following. They're going to want to know the personal name of every owner or owners on file. They're going to want to know the social security numbers. Now, if maybe you have someone that doesn't have a social, you can go ahead and swap out the social with an ITIN. You have the date of birth of the owners, their home address. And like I mentioned earlier, you have the percentage of ownership. Again, most banks, if you're over that 20% threshold, are going to want to have every single owner listed on either a business credit application or a business bank account. The second piece that you should get familiar with is going to be the business's information. Banks are going to want to know what the name of your business is. And they're also going to want to know what type of structure your business is. Is it a sole proprietorship? Is it a limited liability company, aka an LLC? Is it an S Corp? Is it a C Corp? Is it incorporated? The reason why this is important is because it's not just about how your business is structured to the eyes of the bank, but it's also how your business looks to the eyes of the IRS. Here's what that means. If you have maybe a sole proprietorship, then that's technically not considered its own disregarded entity. That only happens once you enter into the realm of LLCs, limited liability companies. That's important to know because if you're the owner and the sole proprietorship, the IRS sees that as just one and one the same, meaning there's no corporate veil. This is a switch that you may consider making, especially as you start to apply for business credit lines, because as you set up your LLC, that LLC is going to have the third thing that you want to have in place, which is the employer identification number. Think of that as the social for your business. And so the same way that you have a social, I have a social, or an ITIN, you have a date of birth, I have a date of birth, you have a name, I have a name. Your business also has all of those key metrics that banks are going to use on that business credit application. And they're also going to use this when you're opening a business bank account altogether. The bank is also going to want to see a business address and a business phone number for that business. Again, this is going to be separate from maybe what you have in place for your own personal life, because remember, the business is going to be seen as its own person. Next, you have a business start date. And if you're wondering, where can I find that? You can typically find that the date that you maybe set up the entity. So if maybe your LLC was set up on September 1st, 2019, that's technically what's going to be considered the start date or the date of birth for that business. So you want to have that in place because on a business credit application, they're going to want to see how old your entity is. And again, this is something that you want to pay close attention to because some banks, depending on what type of lending they do, if your business is under 2 years old, they're not even going to touch your file at all. Next one is number of employees. This may or may not apply to you. Now, don't confuse contractors with employees. Employees is anyone that you have on payroll and that you're paying them as a W-2. If you're paying someone a 1099, if you have someone categorized as a contractor, that's not going to be an employee. And so if you have maybe 10 contractors or subcontractors that you maybe delegate work to, you're not going to be listing them. You're only going to be listing people that are on your payroll. And lastly, you have the classification of your business, specifically business category and business type. Here's what that means. The business category is the industry that your business is involved in. So if we're using the example of construction, that would be considered the industry that your business is in. And then you have business type. This is the line of work that you do in that industry. So maybe you're in the industry of construction, but your line of work is roofing, or your line of work is maybe HVAC, or your line of work is maybe putting down tile. That's what would be considered the type of business that you're involved in within the industry. The third part of a business credit application that banks are going to want to see is going to be the owner's personal financial situation. They're going to want to take a look at your personal income. Now, a lot of people end up screwing this part up because they see personal income and they either want to mix personal income and business income together. Those are two separate parts of the application. And then they also maybe kind of downplay how much money they actually have coming in to the total household income. Because on the application, it's not just income, it's total personal household income. So if it's maybe you and a spouse, depending on how you're filing your taxes, you guys can go ahead and put that combined income on that application. Again, if it's just you, you're single, or you're just living by yourself and that's your living situation, then of course at that point, it's just gonna be your total household income versus you. But if maybe you have the advantage where it's you and a spouse, you and a partner, and you guys are living inside of the same household, you guys can go ahead and combine that, and it's going to help kind of offset some of the losses that you may be seeing on the business side, because now your personal situation has a stronger stance to it. Personal credit is another factor that they're going to take a look at within the personal financial situation. Now, if you're wondering, wait a minute, Irv, why would a bank want to take a look at my personal credit and my personal finances if I'm applying for business credit? Doesn't that kind of defeat the purpose? Well, I'll explain to you why. The business owner is going to be a direct reflection of how the business is going to be operated, again, to the eyes of the bank. This is how they've been doing it for years. If you're trying to go against the system at this point, if you're trying to go against maybe the grain, it's not going to serve you. So I'm giving it to you exactly how they'd want to see it, so that way it can best serve you. So the reason this is important to you is because statistically speaking, if someone has challenged or bad personal credit, this means that they've had a difficult time managing personal debts and personal finances. That right there carries into a business credit application, because now you're dealing with more money. Typically, banks are going to lend 2 to 3 times the amount of a credit line to a business than they would to an individual. And since we're dealing with more money, banks are trying to find a way to mitigate their risk. So this means that the business owner or the business owners have good personal income, and they also have strong credit scores, 750, 780, 800. That's a clear indicator to the bank that this is most likely going to be a business that we feel comfortable lending to, because those financial habits are going to creep into the business. And if that's how they've been handling this is how they're going to handle that. Now, the third and final piece of the personal financial side that you'll most likely see on a business credit application is going to be the liquidity, specifically how much money you have in a checking account or a savings account, either with the bank that you're applying for or with a separate bank. Remember, just like I finished mentioning, the same way that they're taking a look at the business owner, how they've been managing their funds and how they've been taking care of their personal finances are the same metrics that they're going to use to kind of underwrite you to see, is this someone that we can trust, whether they are a startup or an existing business owner? Is this someone that we can trust with 2 to 3 times the amount of money once we give it to them? Now, pro tip, you should not add your personal expenses with business expenses. You want to keep those separately. And the fourth and final piece to the business credit application is going to be the business's financial information. And I see a lot of people screw this up, and so I don't want you to be one of them. When a business credit application is going to ask you for revenue, they're asking you for gross revenue. Now, they're either asking you for gross revenue over the last 12 months, or they're going to ask you for total projected revenue. But what a lot of people end up doing is they put net, meaning how much the business made after its expenses. And so gross is going to be top line, meaning how much the business brought in before accounting for expenses. That's an important piece to know, because if, let's say, you have a business that's bringing in $100K a month, but you have about $70,000 worth of expenses, on the application, you're probably putting $30K, right? Again, for the year. So in this case, we're probably looking at about $360. You're shooting yourself in the foot because you went from 1.2, give or take, to right around $360. The part that you do want to put the expenses in, though, is going to be, again, this is projected expenses. This is an average amount of expenses. So you want to keep a modest number with this. And this is why it's important to know how much actually goes into running your business. Is going to be on the business expenses side. But remember what I mentioned earlier. You don't want to add your personal expenses, meaning your household, what it takes to run your household, your personal light bill, your personal car bill. You don't want to add that up with maybe how much money it takes to run your business. So maybe how much it costs to buy supplies, how much it costs to buy materials, how much it costs to maybe pay for labor. You don't want to include personal with business. You just want to keep your business expenses laid out. I can't stress how many times I'll see this with a business owner and it just kills the application. They'll put net income and then they'll put their personal and their business expenses on top of that. you're shooting yourself in the foot at that point. And the last piece of the business financial information is the type of product that you're going to apply for. So is it a credit card? Is it a line of credit? Is it a loan? And then what's going to be the purpose of using that funds or those funds? And so is it going to be for covering payroll? Is it going to be for travel? Is it going to be for purchasing real estate? Is it going to be for expansion? Is it going to be for paying off big debts? Banks want to know where the funds are going to go to, specifically on the business credit side, since you're doing business with them, because they want to make sure that they're going to get a return on their investment and you're a partner to them at that point. Since you're in business to make money, they're in business to make money, and they want to make sure that they start off that relationship right by knowing, hey, where's our money going and how are you going to put it to work? So before you apply for a business credit card or line of credit, have that in place. It helps if you've already made money because you know exactly where those funds are going to be allocated. Now, one final pro tip for you that I have for you is this. Some banks are taking a look at two things. They're taking a look at your personal credits, but they're also taking a look at the business's credit. And so if you're wondering, what should I have on my business credit? I'll tell you what you shouldn't have on your business credit, and then I'll give you what you should have. What you shouldn't have on your business credit is an outstanding UCC filing. If you have an outstanding UCC filing, which is a uniform commercial code, that means that you maybe owe maybe money to a company, or there's a lien placed on a piece of property that you still owe the money and maybe you're late on it, or maybe you defaulted on it, that's seen as a negative. You want to stay away from that. And if you do have that, you want to address that first, because that's going to raise an automatic red flag with the banks. Now, you can still have a UCC filing placed on your business credit profile if it's in good standing, meaning you've been paying it off on time. We see that all the time, and it doesn't affect anyone from getting access to business credit. But the part that you do want to have in place now, if you're trying to build up your business credit profile, is you want to have a nice blend of financial accounts and a nice blend of vendor accounts. Vendor accounts are going to be things like net 30s, net 45s, net 15s. And then financial accounts are going to be pretty much what we're applying for now, which is going to be maybe vehicles placed in the business's name that are reporting to the business credit bureaus, business credit cards, a business line of credit, a nice sneaky way that you can add a business trade line to your business credit profile without maybe having to go through the hassle of applying for a bunch of stuff is by simply adding a secured trade line to your profile or to the business's profile. One of the ways that you can do this is walking into a bank, letting them know that you want to open up a secured line of credit. Obviously, you'll be funding it with your own funds the same way that you typically would on the personal side, but this is going to help strengthen that credit profile because now other banks are able to see, oh, there's already a line of credit reporting on that business profile. So if you found value in that final pro tip, and if you found value in this content today, consider sharing it with another entrepreneur that's trying to get their businesses off the ground by leveraging capital. Again, if you found value in this content, all that we ask is that you leave a like and you consider subscribing because it does help this channel reach a larger audience. But other than that, I appreciate you guys checking us out. Until next time, everyone, I will see you in the next video.